The extraordinary thing about the Inflation Reduction Act was that the US federal government essentially has no limit on its borrowing, right? So it could implement these uncapped tax credits. The limit of spending was constrained only by the demand for those tax credits.
You're listening to the USSC Briefing Room, a podcast from the United States Study Centre at the University of Sydney, where we give you a seat at the table for a USSC briefing on the latest developments in US news and foreign policy. We'll cover what you need to know and what's beneath the surface of the news.
Hello, and welcome to another episode of the United States Study Center's podcast, The Briefing Room. My name is Jared Mancha, and I'm the Director of Research at the U.S. Study Center. And before we get started, I want to acknowledge the Gadigal people of the Eora Nation, pay my respects to their elders, past, present, and emerging. So we are today recording with one of my favorite colleagues at the U.S. Study Center because we have a lot of news in the United States these days. Not that that's different than any other time period of the last, decade or so, but legislation just passed. And in the United States, legislation is not hard. It's not easy to come by. It's pretty hard to come by because of how log jammed and jammed up our politics are in the United States. What you see is a lot of executive orders, executive actions, and lots on the foreign policy front. But in terms of lasting legislation, we just saw massive legislation pass in the United States in the form of the One Big Beautiful Bill Act. Now, this act touches on a lot of aspects of the United States in so many different ways, particularly when it comes to domestic issues related to climate change and energy, as well as taxes and the social safety net in the United States. And to make sense of this from a climate and energy perspective in particular, we have a non-resident fellow with us today named Lachlan Carey. He's, in addition to being a non-resident fellow with us, he's a manager at RMI, where he leads work on U.S. regional economic development through clean energy investment. And previously, he was at the Center for Strategic and International Studies and has looked at the geopolitics of the clean energy transition, comparative green industrial policy, U.S. federal climate policy, and clean energy supply chains. And before going to the United States, he to study at Princeton, he was an economist in the Australian Treasury Department. Now, that's his formal bio. I will say less formally that he is, in many ways, one of America's leading experts on the Inflation Reduction Act and U.S. climate policy, but he also happens to be Australian. So he is someone who I like to say we need to get an insurance policy out for, because his insights are too valuable to have in one person. And so, Lachlan, thank you so much for joining us again on this podcast.
Thank you for having me, Jared. It's always great to be introduced by you, so I appreciate it.
Yes, and for those unaware, Lachlan and I, along with another non-resident fellow, have been working on our climate work at the United States Study Center for a few months now. And we're really, really proud of the fact that at the U.S. Study Center, we have been working on really tough issues, whether it be AUKUS or private sector finance, getting involved with the government. Beyond that, we also have fantastic non-resident fellows. In addition to Lachlan, we have Meg McDonald's. Now, the three of us have been working on trying to come up with a plan for what the United States and Australia do on climate and energy efforts moving forward. So when Lachlan says he appreciates an introduction, it's because I've been introducing him in a number of roundtables with leading Australian climate and energy experts and American experts as well. And this is just the latest conversation we're having on a very meaty topic. So Lachlan, just to remind you, one thing we like to do that's a bit quirky here is have a stat or figure at the end of the podcast that you can maybe share with the audience. Are you okay with that?
Always.
Fantastic. All right. So, as was mentioned, you are a leading expert on the Inflation Reduction Act, which by all accounts was one of the largest pieces of legislation ever in the world to pass, which was passed by the Biden administration and really reshaped the U.S. economy for many years to come in terms of incentives for manufacturing and green energies. But I think more than anything else, we're seeing with this one big beautiful bill is that there's been a lot of focus on pulling back and doing less on that. The Trump administration has gone out of its way to really try to remove a lot of the incentives for the climate initiatives that the Biden administration had championed. Now, that's on one hand. On the other hand, Brian Deese, one of the sort of architects of the Inflation Reduction Act, made clear that they really tried to Trump-proof it, right? With more than 70% of the Inflation Reduction Act initiatives taking place in the United States occurring in Republican districts that had voted for Republicans. And so the thinking in the Biden administration was they probably won't get rid of all of this Inflation Reduction Act because it goes against Republican interests. Ultimately, what do politicians want? They want jobs, good paying jobs, and the Inflation Reduction Act was one way to solidify jobs in Republican districts. So, Lachlan, top level, do you think where we're at right now is a complete removal, a most removal, or a partial removal of the climate and IRA-related efforts that were occurring before the Trump administration won his second term of office?
I definitely put it in your most removal category, right? The Inflation Reduction Act, it was officially $369 billion worth of climate and clean energy spending. Folks like Goldman Sachs put that figure closer to $1 trillion. So this was really, a really, really big deal when it passed. And it's been a huge deal over the last couple of years here in the United States. For instance, we've seen over $110 billion worth of clean tech manufacturing projects announced over that time. Wind and solar have continued to be the fastest growing sources of new electricity. EV sales have, been increasing at this rapid clip. So clearly, it sort of had this monster effect on the energy transition. The One Big Beautiful Bill Act comes in. Not only does it significantly sort of shorten the time frame in which a lot of those tax credits are available, which was by far the largest source of spending in the Inflation Reduction Act, but it ends all the grant programs that were really important for things like building decarbonization, a lot of industrial decarbonization, demonstration projects, all sorts of things around energy and climate justice. Of course, those were immediately ripped up by the Trump administration. So it's a huge step back, but it's not a total defeat for the industry, and it's not going to be a sort of complete blast from the past in terms of we're all turning back to, oil, gas, and coal from here on out. Our expectation is, even though wind and solar were clearly the targets of pulling back spending in this bill, but we will continue to see those be the fastest sources of new electricity, despite the end of those tax credits. And that really speaks to just how cheap those technologies have gotten over the last decade or so. There's going to continue to be growth in electric vehicles, but this, I think, is going to have a really significant impact on the car makers, who are just going to fall further and further behind China, who are really just dominating in the electric vehicle space. So we can kind of go through technology by technology where there are going to be these really different impacts. But ultimately, it's a huge step back for the US. It's a huge step back for the climate. And because the US is such a big player in this space, particularly in the innovation of new clean energy technologies, the sort of downstream implications for countries like Australia kind of can't be overstated either.
So I have to wonder then, again, from a broad level, you said it's a step back for the US. Do you think that this is an area where the US is now going to basically cede ground to China on all these green technologies? Do you see Europe taking up the mantle, or Europe and Australia and other OECD countries, Japan maybe, taking up the mantle? Or is this simply not that, and instead just the US no longer just being the active participant that it was in developing these technologies?
Yeah, so I think we've got to break it down in a couple of different ways, right? So if we start with electricity generation, as I say, wind and solar, those bulls are already out of the gate. Now, the latest modeling that we see, the folks like the Princeton Net Zero Lab or the Rhodium Group over here, they expect somewhere in the order of 100 gigawatts less solar, for example, to be installed between now and 2035. That's a huge amount. But as I say, solar is still expected to be the number one source of new electricity. So, it's a matter of the relative effects rather than solar suddenly going to completely cease to exist. On the other hand, you do see tax credits retained for clean firm generation in technologies like enhanced geothermal and nuclear, where the US does have some pretty clear advantages. The leading small modular nuclear reactor companies like NuScale, almost all of them are based here in the US. The venture capital funding into those sectors is really significant. So over the next kind of 10 years, I'd expect to see some pretty significant changes in the nuclear industry. And that's an area where you could imagine the US retaining a lead in terms of its technological sophistication and capacity in a sort of clean or no zero carbon source. Enhanced geothermal is another great example where, because of advances in fracking for the oil and gas industry, you see this really interesting sort of side hustle almost develop in what we call enhanced geothermal. And so this is essentially digging deep enough, cheap enough that you can power an electricity turbine just using really, really hot rocks. And that is really exciting sort of advance in the sector because, as I say, it's not only clean, but it's firm in the sense that it doesn't sort of rely on weather patterns to produce this energy. It maintains that what we used to call baseload power. So on the electricity generation side, there's sort of differential impacts. The manufacturing side, I think this is where the US is essentially putting its hands up and saying, we cede this ground to China. Maybe we'll leapfrog in certain technologies. So battery manufacturing, for example, the tax credit for manufacturing of batteries is retained in the bill, but there's a whole bunch of complicated stuff around what they call foreign entity of concern requirements, where because China dominates this supply chain so completely, the ability to manufacture a battery in the US without using supply chain components bought from China is just going to be really, really challenging. And so, I think we're going to see real slowdown in investment in the battery sector. Maybe advances in things like sodium ion or solid state batteries. Maybe this is will get the US being able to leapfrog China in that area. Similarly, advances in perovskites in solar, for example, where China is just so dominant in the current iteration of solar PV technologies that I don't see anyone, certainly not the US anymore, and still not Europe, catching up in solar manufacturing either. And then when you go upstream into the critical minerals space, you see, US Republicans really putting a renewed focus on US ability to mine critical minerals, mostly from a national security and defense standpoint, but there is a lot of overlap between some of these magnetic rare earths and so on. But again, the US has struggled so much to open mines and to kind of bring back any sort of mining industry in the last sort of 20, 30 years, that, I would still expect to see most of the activity in the critical mineral space being in places like Australia, Indonesia, that have really shown success there already. So, to take a very, very long answer to this, I think it really depends which piece you look at. The US is still over 40% of the world's VC and early stage financing of climate and clean energy technologies. Even without these tax incentives, like that's still just a huge advantage for the US with its national lab system, its sort of world leading innovation capacity, where, I think we're still going to see a lot of those advances and new technologies coming out of America. On the other hand, there are places where, as I say, the Trump administration has basically decided, well, China dominates this sector, so we shouldn't be putting money there because that's just giving money to the Chinese. I would argue the Biden administration's approach was a more sort of strategic way of catching up in those critical sectors than the Trump administration's sort of tariff and prey approach. But that's sort of where we've landed.
Yeah, I think the Biden administration, they like to say that they saw themselves in a race against the Chinese, and the Trump administration tried to trip up the Chinese, um, whereas the Biden administration wanted to trip up the Chinese to a certain extent, but also want to run faster, and not just focus on tripping them up. So one thing that was interesting, the former governor of Indiana, Republican governor, was out in Sydney not too long ago, and Eric Holcomb, and he we were talking about the Inflation Reduction Act, and I asked him what he thought of it. He basically said, "We loved it. We absolutely loved it because it energized what we were already doing." So one question I have, as someone that works with a lot of states, do you see with the One Big Beautiful Bill cutting out a lot of the IRA? Do you see the states taking the mantle on this, individual states, what, to what extent is this fillable by states? Is this sort of vacuum perhaps resolved by states, and to what extent is this only a federal government thing that is irreplaceable?
Yeah, it's a great question, and that's a lot of where our focus is going to be over the next couple of years. But I think it's just really interesting to step back and think about the point you made earlier, right, where there was clearly this sort of political economy theory behind the Inflation Reduction Act of let's put as much of the spending as possible in Republican districts, and that's going to quote unquote Trump-proof the bill. And in some senses, it has. The advanced manufacturing production tax credit still exists. That's where this huge explosion in clean tech manufacturing has come from. Most of that manufacturing has been in red states like Indiana. I do worry that those foreign entity of concern requirements, significant sort of downgrades in demand projections, are going to really inhibit the ability of 45X to make American clean tech manufacturing globally competitive. But there is an extent to which a lot of pretty significant climate policy is retained. It wasn't a wholesale sort of repeal of the bill. So in some ways, that theory I think bore out, but it didn't to the extent of creating what Atlantic writer Robinson Meyer called the green vortex, where heightened ambition in red states creates bottom up sort of feedback loop that leads to more and more ambition in the climate space, and we just haven't seen that yet. But in terms of can the states step up, and what can the states do? I think the real challenge for state governments is fiscal capacity, right? The extraordinary and basically the extraordinary thing about the Inflation Reduction Act was that the US federal government essentially has no limit on its borrowing, right? So it could implement these uncapped tax credits, something like the manufacturing production tax credit I mentioned, or the technology neutral electricity tax credits. The limit of spending was constrained only by the demand for those tax credits. And that's why you get this huge range between a $369 billion or a $1 trillion bill. Now, state governments can't do that. A dollar spent on encouraging a battery manufacturing facility in Indiana is a dollar that could be spent on a local public school, because they have very constrained fiscal limits. And so working out how to most effectively direct those dollars to projects that meet kind of basic cost benefit analysis, that generate the kind of economic development impacts that they need for those dollars to sort of be worth it over the longer term. It's a really difficult thing. And a lot of US states don't have, significant kind of governance capacity to do a lot of that type of analysis. That's where hopefully organizations like ours can step in. But I think it is going to be a real step back, kind of regardless. The first sort of issue for a lot of these states is going to be saving the projects that have already been announced, right? So I think the stat is there was something like $63 billion worth of new clean energy and clean tech spending in Texas alone since the Inflation Reduction Act was passed. There's a further $128 billion worth of new investment announced. So how much of that $128 billion can Texas save, and what does it look like to do that? how do the economics of those projects pencil out without the tax credits? How much of that can states step in and replace? These are still pretty unknown questions. But in the same way as when Donald Trump was elected in 2016, pulled the US out of the Paris Agreement, and US states banded together and said, "Hey, we're still all in," and sort of signed their own version of the Paris Agreement, if you will. I think there is momentum towards states doing something similar here. Of, well, the Inflation Reduction Act really worked for us. How do we kind of replace the pieces that we have seen the benefits of? And that's the work that's happening sort of as we speak.
Great. So glad to get your insights on this. In terms of the political economy, you mentioned that. If somehow a Democratic administration takes office in 2029 and were to overturn the One Big Beautiful Bill callbacks on the IRA, do you think we could somehow in the US they would revert to what was happening before, or do you think some things are lost and gone forever? Or what is lost and gone forever? What is salvageable, and on where we go from here? And again, I realize we're talking about a bunch of different huge pieces of complex legislation and a lot of different political considerations.
Yeah, obviously, really tough question. If I had that kind of crystal ball, I'd be making a lot more money than I do. But I think there's a couple of ways we can look at it. The thing that probably worries me the most is if you look at the sort of history of Democratic trifectas, what essentially happens is they get one big bill. And that big bill kind of represents where the quote unquote groups are at that point in time. For Obama, it was healthcare. For Biden, it was, it was bigger than just climate, but it ended up just being climate that sort of survived out of the whole Build Back Better process. Now, is there any guarantee that for the next Democratic administration or trifecta, that they would have, that climate would still be that big issue? I would suggest not. I'd say extremely unlikely. They had one really big swing at it. And, a lot of ways it worked, but clearly it didn't deliver the kind of day-to-day kitchen table benefits to voters that, would get them reelected for starters. And it's not like there were people crying in the streets when the Inflation Reduction Act was, largely repealed. So there's a lot of questions still to be asked over, what the future of climate policy looks like. But I would expect the next time energy policy gets done in a more bipartisan fashion, whenever that is. But, there are enough examples in recent years that it is possible. I would expect some degree of recalibration back to a kind of sensible center on some of this, right? Where wind and solar aren't quite so targeted as like the villains of the story, and natural gas isn't sort of elevated to being, the solution of all solutions, and instead we get somewhere in the middle. I think there are pieces of the One Big Beautiful Bill Act, or HR1 is sort of easy to say, that it's worth kind of thinking about and holding on to, even if the way they went about it was a bit more with a sledgehammer than a scalpel. So if you look at the sort of theory of tax credits, why we do tax credits in the first place, it's to bring innovative technologies to market, right? And it's to give them enough of a boost that they can compete on a relatively level playing field with legacy industries that have all the advantages of having been around for decades: the infrastructure, the workforce, the financing, et cetera, et cetera. Now, the wind and solar tax credits had been around since 1978. Like, wind and solar have had a long time to catch up. And yeah, depending on the LCOE estimates you look at, without the tax credits, wind and solar aren't always beating natural gas, but they're always beating coal. And they're pretty darn competitive with natural gas in a lot of markets in the US, even without the tax credits. Um, so I think there's actually a pretty strong argument for phasing out the tax credit on wind and solar, and keeping the tax credit for those innovative, sort of newer, clean electricity generation sources that need that boost, right? The enhanced geothermal, the advanced nuclear, um, uh, battery storage, particularly long duration battery storage options on the grid. These are all areas where I think the case is still really, really strong, and I would expect to see sort of more of that pivot towards the center. The bit that's harder to predict are some of the grant programs, right? So things like the climate and energy justice initiatives that I mentioned, where there was a real focus in the Inflation Reduction Act, and a lot of spending on things like fossil fuel communities, thinking about how do we get ex coal and gas, workers sort of on board with an energy transition, and clearly those efforts didn't sort of fully work from a political standpoint. And so would there be the energy to sort of make a concerted push on energy justice and fossil fuel communities and that sort of thing second time round? I doubt it. And so again, kind of depends piece by piece. But my prediction would be that tax credits are going to remain a key part of US energy policy. There'll be some fighting over exactly what that looks like. But I would say in wind and solar, where they are mature technologies now, we probably won't see those tax credits come back.
Great. Now, one last question just on the ramifications of the One Big Beautiful Bill before we move beyond just the US. And it's double barreled. Firstly, do you expect to see more cuts? We just saw some rescission packages voted on in Congress. But also, what do you think this administration is moving toward in terms of a energy policy? I know it's an all of the above and energy abundance, but what does that actually look like from a tangible perspective moving forward? So basically, we know what they're against, and my question is: are they going to do more to be against that in terms of passing more things on that, but also what are they moving towards for the next 3.5 years?
Yeah, great question. I would say one slight correction would be that they would prefer the phrase energy dominance. Energy abundance is perhaps Ezra Klein coded for this particular administration. But their energy dominant strategy energy dominant strategy is really built around natural gas and LNG above all. Drill baby drill, of course. Though, as we've seen, the ability of the administration to actually affect the amount of oil production is pretty limited. And, Donald Trump wants to both reduce oil prices and increase oil production. And those two things just can't happen with all the wild cutters existing on, tiny margins, depending on the oil price. So, they're going to continue finding ways to bolster LNG exports. I think US LNG export capacity is expected to double in just the next couple of years. It's already overtaken Australia as the world's largest LNG exporter, and where Australia's sort of reserves are starting to dwindle, the US is just sitting on this enormous stockpile, and we've clearly seen the kind of geopolitical advantages in Europe that it can wield through that LNG capacity. So I'd expect them to double down on that approach. In terms of are there going to be more cuts? I'd say no legislatively, but the real devil is in the details from the administration. So I mentioned these FEOC, or Foreign Entity of Concern requirements, a couple of times. How the Treasury writes those guidelines is really going to affect how much this impacts manufacturers and energy project developers in the US, in terms of how stringent those guidelines are around China. Trump immediately came out after HR1 was signed and sort of said, we're going to do everything in our power to make sure that there's no wind and solar projects happening in this country. You've seen a bunch of changes at the Department of Interior, for example, around permitting on federal lands. So there's all sorts of things the administration can do from a rulemaking standpoint in terms of gumming up the works on clean electricity deployment. Again, that's still only going to kind of slow the inevitable, but it does have a real impact. As I say, I think it's really about the rulemaking process that's going to have the biggest impact from here on out. I don't think we're going to see significant cuts out of Congress. I think they've managed to, they literally called it the One Big Beautiful Bill Act. So I don't expect a second Big Beautiful Bill Act. And so that's where I'm really sort of focusing in terms of the impact of what this administration is doing.
Great. Now, moving forward, the U.S. and Australia have time and time again, especially when there are left center governments in each country, talked about climate and energy partnerships and how they can do more together. And I think one thing that I'd love to hear is your thoughts on where the U.S. and Australia collaborate moving forward from here on out. One thing that we said at the U.S. Study Center is that if you look at the Climate Compact as signed by the Albanese and Biden governments, they talked about battery technology, about supply chains, about critical minerals, and in our discussions with the Trump in the Trump team, informally, it seemed like as long as they didn't call it climate, there would be more receptivity in the Trump administration to work on those very topics. In many ways, it was a branding challenge for working on what we used to call climate areas. Do you still see it that way? Where do you see the U.S. and Australia needing to having opportunities to work together on these issues?
Yeah. So, as you said, Biden and Albanese, they came out with this big announcement where they sort of announced that now climate was the third pillar of the relationship after defense and the economy. And I think the first place to start is, well, let's just rebrand that, and now it's energy is the third pillar. And so everything the US and Australia do on this front needs to be rebranded from climate to being about energy security and jobs. Now that clearly limits the scope for cooperation, because in a lot of the energy sectors that the US really cares about, Australia and the US are competitors, right? LNG being a prime example. Though, of course, there is a huge amount of American investment in Australian natural gas industries. But if you look at the pillars where I think there's enough kind of bipartisan support and that both kind of meet climate objectives without having to say climate, critical mineral supply chains is number one on all those lists. Australia has some of the world's largest reserves of lithium, of copper, of a whole bunch of the critical minerals that go into particularly electric vehicle, but also good storage batteries as well. And so that's an area where I would imagine opportunities for cooperation. Of course, as I said, this administration is more focused, it seems, on opening new mines in the US than necessarily friendshoring capacity. But I think at a certain point, they're going to realize that the lead time on some of these projects is just so big. And they've just seen, in their trade negotiations with China, how much leverage China has over them in areas like rare earth minerals, that, they're going to need solutions faster than that. And Australia is one of the few places that's going to be able to help them there. I think in the AUKUS Pact, there's a whole bunch of nuclear and defense related clean tech, opportunities for collaboration that I think still exist. And then hydrogen, it's unclear where the hydrogen sector is going now. In the One Big Beautiful Bill Act, which we didn't get to discuss, was that they scrapped entirely the production tax credit for green hydrogen. And so on the one hand, this opens up, some opportunity for Australia, who, under the Future Made in Australia Act, there is some incentives for hydrogen. There's a bunch of different programs that, the Albanese government and its predecessor introduced around hydrogen, that maybe some of those projects, some of that capacity shifts towards Australia. So we'll see where that goes as the hydrogen sector kind of recovers. And then I think a really big opportunity for Australia is we've been focusing a lot on the upcoming reauthorization of the Development Finance Corporation here in the US, where the Trump administration, as most people have probably heard, essentially completely scrapped its foreign aid budget. It got rid of USAID and is essentially aiming to put all that capacity into the Development Finance Corporation, which tries to take more of this de-risking approach to development of co-investing alongside private investors. And this is an area where they're looking at, for instance, expanding the number of countries the DFC can invest in to include upper, middle, and even higher income countries. And so maybe that's an opportunity where Australia can benefit from some of that DFC investment. And of course, this is an area where I think Australia has a lot of existing capacity and expertise through places like the Clean Energy Finance Corporation, who are really some of the best kind of in the business at this type of sort of um, public financing. So, I think there are still opportunities. They're clearly much more limited. I think Australia is going to be in a really sort of tricky position next year when it's still not official, but it looks like Australia is going to be the next host of the Conference of the Parties, or COP meetings, which is the world's largest and most important sort of climate negotiations. Obviously, Trump has pulled out of the Paris Agreement, and so there's clearly going to be some tension there. Assuming Albanese ever gets a meeting with Trump, of course. But I think this sort of shows how careful Australia is going to need to be in its branding and how it communicates these climate efforts, where it really is pitching projects, policies, and these big platforms like COP as being squarely focused on energy security, on job creation, and sort of toning down that climate rhetoric.
So that's great for a lay of the land of where the U.S. and Australia should go on this. But what do you think Australia on its own should really take away from this legislation that just passed Congress?
Yeah, it's a great question, because my fear is that Australia, the US, and a whole bunch of other places that sort of got excited by the Inflation Reduction Act and the type of approach that it took to climate policy are going to throw the baby out with the bathwater, in response to the Inflation Reduction Act kind of, not having the political success that people thought it would. Australia has its own sort of imitation in the Future Made in Australia Act. The EU has its green industrial deal. So a lot of places looked at the Inflation Reduction Act as maybe this model that they could copy. And I think that there needs to be some nuance in thinking through that. And I think there are sort of three themes here that Australia needs to think about in kind of reflecting on what HR1 and repeal of the IRA means for its own sort of climate policy and climate trajectory. And these are three themes that we've really been circling around in our roundtables and our work at the US Studies Center. And the first of those is this idea that all politics is local, even climate policy. One of the phrases that really drives me nuts is this sort of cliche you hear all the time. Well, climate change is a global problem requiring global solutions. Well, it's not actually true. Climate change is a global problem that happens because of lots and lots of local decisions, right? So if you think about, the largest source of carbon emissions is the electric grid. Electric grid is a really local challenge. We only need to look at transmission lines through potato farms in Victoria, or a new transmission line going through corn farms in Missouri, to see that the real climate action takes place at the sort of hyper local scale, which means that you need to sell climate policy through this same lens of local politics. You need to make climate about energy security. You need to make it about job creation. And so I think these are reminders. I think the Labour Party has gotten pretty good at this. Things like reiterating the notion of Australia as a renewable energy superpower, of how it can bring down costs. These are all ways that I think are going to be even more important going forward in selling things like the Future Made in Australia Act, in justifying why we're putting all this time and effort into something like the next COP meeting. The second theme is this notion that everything now is filtered through competition with China, right? If you look at so much of what's within HR1, it really comes back to this notion of, where do we think we can compete with China, and where do we think China has such an advantage that it's not even worth trying. And of course, Australia constantly faces this battle of choosing between, its largest economic partner in China and its sort of largest strategic and security partner in the United States, and for Australia, its largest trading partner is also its largest export market for coal. On the other hand, China is the largest exporter of clean energy technology. So you get into this really tricky position where the more we move into an energy transition, the more we're relying on China for a lot of these supply chains. And that's really at odds with a lot of our geostrategic and geopolitical goals, which, I think is something we just have to really reconcile in how we think about and pursue climate policy. And then finally, this notion that I think progress is going to happen in coalitions of the willing on the international stage. It's not going to happen in these big multilateral sort of international forums. And this is going to be a real challenge again for Australia hosting COP next year, where if you look at where we've seen a lot of success, on the climate front, it's in these sort of minilateral coalitions that focus on shipping or methane or coal or critical minerals. It's not, let's get the whole world to sign up to a big binding agreement on climate change. And so how Australia sort of reconciles that notion with the fact that it's hosting the largest big global sort of event on climate is going to be tricky. But increasingly, if you look at COPs and you look at where the progress happens, it's on the sidelines. It's in these mini-lateral groupings. And I think Australia is going to have to look at, efforts like the Mineral Security Partnership with the US, like AUKUS with the US and UK, like the Quad with Japan and India, to see what kind of progress it can make on this front, so piece by piece, problem by problem, rather than sort of tackling climate from this big kind of top-down perspective. So, that's where I see the real lessons for Australia, being out of this experience. I think Australia is, doing a really good job pretty much on all three of these, but a lot of, I think what we've seen out of the US is kind of a reminder on, where to tread carefully.
Thank you so much, Lachlan. I guess last thing before we close up is to get your stat or figure of relevance to this conversation we've had today.
Yeah, so it's a bit of a depressing one, unfortunately, but this is a conversation about climate change, and I managed to spend this whole time avoiding talking about the climate impact. So the Rhodium Group has the total greenhouse gas emissions impact of the one big, beautiful bill coming out to somewhere in the range of 315 to 574 million tons more greenhouse gas emissions in 2035 compared to the baseline. To put that in perspective, Australia's annual emissions are about 470 million tons. So the long and short of it is we've added a whole other Australia to the sort of impact on the rate at which our planet warms and becomes increasingly unstable because of this particular piece of legislation, which is just to say, the US is an incredibly big place with an incredibly big impact on the energy sector. It's why I spend my time thinking about it and talking about it. And as much as I love Australia, where I'm from, and I think it's doing a whole bunch of things right on climate, the unfortunate fact is, this is going to come down to the US, it's going to come down to Europe, it's going to come down to India, it's going to come down to China. And if those countries can sort out their grids, sort out their transportation sectors, sort out their industrial sector, the rest of us are going to take those technologies and run with them. China's doing a great job. It's electrifying faster than anybody else. It's by far the world's largest investor in wind, solar, EVs, batteries, electrolyzers, you name it. India's making all sorts of really important strides, particularly impressive given its stage of development. Europe obviously is doing all sorts of things really, really well, but it really struggles on the industrial side. You look at what happened with Russia and Ukraine, natural gas, and the way they've immediately sort of had to turn to LNG. There's clearly a lot left to do in that space. And unfortunately, now the US has taken a huge step back. So, it's tough times for the climate, and I'm living through yet another record-breaking summer here in Washington D.C. And so we're all living it day to day. But hate to end the podcast on a bummer note, but that's where we are.
Well, thank you for that sober stats, Lachlan, and thank you for the conversation today. Always a pleasure to chat with you. As we close up, just want to highlight a couple other podcasts for the U.S. Study Center, including the USSC Live series, where you can hear our recently recorded events, including an event featuring the Ukrainian ambassador to Australia at our event called Can Ukraine Survive? And we also have the former chief of staff to Secretary Lloyd Austin named Kelly Magsamen. And lastly, we have our CEO's podcast, the Asia Chessboard, where you can hear a whole range of commentary on diverse topics. Thank you again, Lachlan. I hope we can record another podcast soon enough.
Yeah, let's hope so.